everyone, welcome to the news on Magic Bricks, now India's first 24/7 property business channel. I'm Krishna Kumar. Let's take a look at the top stories that we're tracking. IPAL Fund Managers raises 175 crore rupees from HNI investors to be invested exclusively in the Mumbai property market. Expects 20 to 25% return on investment. That's our top story. The Maharashtra government wants to work on a tech-neutral approach for affordable housing bids. Plans to make headway in the state's move towards the Prime Minister's ambitious Housing for All project. Tamil Nadu submits its smart city proposal to the Urban Development Ministry. In our new series, Property 2016, we bring an outlook of the commercial property market in Bengaluru and tell you what to expect in the coming new year. Straight to our top story then. Mumbai real estate has just got a fresh vote of confidence. IPAL Fund Managers, headed by Ramesh Jogani, has raised 175 crore rupees from HNI investors with a clear mandate to buy into the Mumbai property market. But here's the interesting piece of information. The fund expects a return of 20 to 25% on this investment. My colleague Aishwarya Paliwal has this report with all the details. Take a look.
Ramesh Jogani's IPAL has raised close to 175 crores for their fund called Residential Opportunities Fund 1. This fund has been raised only for Mumbai and has been raised with the help of a lot of HNIs. For investing, this fund is looking at areas like Parel and Goregaon and will be investing in under construction properties, which will range anywhere from mid-income houses to the luxury category. They are looking at doing purely equity deals. They want to fully exhaust this fund in the next 2 to 3 years and are looking at a return of anywhere between 20 to 25%. Now, with this fresh inflow of money into the real estate industries, it opens up new avenues for home buyers like you and I. People who want to buy homes will now get more options to choose from.
More options to choose from. So good news for home buyers. To give us more perspectives on this, we are being joined by Ramesh Jogani himself, Managing Director and CEO of IPAL Fund Managers. Mr. Jogani, thank you so much for being with us here on the news and Magic Bricks. Now, I will start by asking you about this particular fund. It's a tough market for realty investments. How did you manage to raise money for the Mumbai market specifically?
This is a domestic fund. So most of the money has come from the major metro cities. That would include Delhi, Bangalore, Mumbai, and a few from cities like Surat and Baroda, and some money from Calcutta. But most of it has been raised domestically, and we cannot raise money from offshore because it's a domestic fund. But there's been a new guideline which says NRI can invest, and we've seen a lot of interest coming from the NRIs, but unfortunately there's no clearance on the tax part, so we are waiting for that clearance, and hopefully we'll have some money coming from their NRIs in the near future.
All right, Mr. Jogani, the thing that struck us the most is that you are looking at a return of 20 to 25% on this investment in this economy. Don't you think the 25% return is a little too much to ask for?
The way our strategy works is we are going into under construction, and it is at a late stage construction, so where there's no approval risk. A lot of work has already commenced on site, and what we have seen, and that's why we've evolved our fund around this strategy, is a huge discount from ready possession to under construction. So if you look at Parel, for instance, the rates of ready buildings are 45,000 and even more, some of the buildings, and the under construction in the same vicinity is available at 20 and 25,000 rupees a square feet. So what we are doing is capturing on this arbitrage, where as the project matures, the prices keep going on. So it's non-speculative. We are only taking advantage of the liquidity crisis, poor sales, and obviously we'll be looking at developers who have a track record. So we are very, very confident of achieving those targets because it's not purely speculative. And secondly, we are not depending upon prices to rise further.
All right, Mr. Jogani, so you're quite confident of this particular 20 to 25% returns. Now, you've chosen the equity route for this particular investment. Why do you think that equity is better?
This would be pure equity. We do not believe in debt because we believe that debt has the risk of an equity. And in a debt structure, you kind of cap your income. So basically, if I were to give a debt to a developer, it would be 18%. And after taxes, it would be 12%. And after fees and carry, net in the hands of the investor would be 10%. So, and being a long gestation investment, I think, then you might as well go for the equity where you enjoy the entire upside. So our fund is basically for equity.
All right. I'm afraid we'll have to let you go, Mr. Ramesh Jogani, Managing Director and CEO of iPal Fund Managers. Thank you so much for taking time out, however, to be with us here on the news on Magic Bricks Now. Now, and on to our special series on investment opportunities in the new year, Property 2016. Strong supply, steady demand and increasing investor interest. It is India's top global investment destination. Bengaluru's commercial realty is in a sweet spot with increasing demand for office space, which was mainly driven by IT and IT SEZs and startups. But how did it fare over the last 1 year? How does the city's commercial realty stack up when compared to other cities? Amita Balachandra gets us this report with details from Bengaluru.
While residential real estate market has seen decline in sales, commercial real estate market, especially in the city of Bengaluru, has been moving over the last 1 year. Bengaluru, when compared to the rest of the cities, has seen maximum office space absorption, net office space absorption, and for reasons that are very, very simple. First of all, it is the IT hub of India. Most of these areas which see office space demand are IT concentrated areas in the city of Bengaluru. So it's seen a major influx of supply, especially over the last couple of years. That's one. Second, it is also the startup hub of India. Remember, Karnataka was the first state when compared to the rest of the states in India to have a startup policy. So these are the two major reasons why Bengaluru is booming when it comes to commercial real estate. What's also interesting to note here is that peripheral business districts like Outer Ring Road, Whitefield, most of the IT concentrated areas which also have a large stock of IT companies and IT SEZs are doing very well. No wonder then Bengaluru tops the charts in office space demand. What's also interesting is that it is the top global investment destination, and experts believe that the growth is only going to be positive going forward as well. In Bengaluru, with camera person Satish Shetty, Amita Balachandra for Magic Bricks Now.
And to get a detailed perspective on that, we are being joined by Ashutosh Limaye, Head Research at JLL. Ashutosh, thank you so much for being here on the news on Magic Bricks Now. First up, Amita was just talking about, she was just taking us through the numbers in the Bengaluru commercial market. Tell us, what are the key drivers that have been for the Bengaluru commercial market this year?
Bangalore actually attributed for 1/3 of all India office leasing, so that's the lion's share. And I think next year also it's going to witness similar good performance. In terms of yields are between 9 and 9.5%, but the rental appreciation is good. So Bangalore is the only city in India which has crossed the previous rental peak all Indian cities achieved for their respective city districts in 2008. So that will continue for Bangalore, and the city that experiences very healthy occupancy, the vacancy numbers are just 4.5%, is going to command good rental appreciation, good absorption. I think it's a question of how much supply Bangalore can come out with to meet this very healthy demand next year.
Okay. Ashutosh, now let's just shift focus a little bit and talk about specifics here. You tell us, what are some of the emerging areas in the city? What are the sweet spots in the city that people should look out for in the year 2016?
I think the secondary business districts of Bangalore, which is a large area and of course abutting the outer ring road, is the most happening area. But now we are seeing some other areas also taking shape. The Bellary Road corridor is also now taking off as IT neighborhood, and a few inland pockets within Whitefield and Hosur Road that were left vacant are getting filled up by office buildings as well. So these are the areas which are continuing to grow as office districts. I think concern for any corporate company anywhere in the world would be how to ensure that the talent or the staff that the company employs has a very easy and comfortable work-home commute. And I think that's the case in Bangalore as well. So I think corporates are cautious and conscious about the fact that Bangalore's infrastructure, transportation infrastructure is getting pressured to a great extent. So they are choosing the locations in secondary business districts which relatively can be accessed by the large talent pool residing areas of South and East Bangalore.
Okay. Ashutosh, we need to wrap things up over here. But before we let you go, quickly tell us what is your overall growth outlook for Bengaluru market for the year 2016? Give us the big picture.
I expect more growth going forward. In fact, Bangalore has never shown a situation of oversupply and very high vacancy. And because Bangalore has been always in tune with what demand the city experiences. So I think that's the maturity of the developers there to be very close to what market wants and deliver that much that market can digest. And that's why Bangalore enjoys very low vacancy over a consistent time. So I think next year also Bangalore is going to do well in office markets. We are going to still experience 9 million plus of space getting leased. The supply is going to be around 6 million square foot. So that means that rents are going to go up and vacancies are going to remain, if not come down marginally.
All right, Ashutosh Limai, Head Research at JLL. Thank you so much for taking time out to have this quick chat with us here on the news on Magic Bricks Now. Now moving on, 2016 is going to be an interesting year for big ticket residential deals. In 2015, an apartment fetched 160 crore rupees in Mumbai, and in Delhi, a bungalow fetched 304 crore rupees. Neither of it is in my budget. Aishwarya Paliwal is standing by with all the big deals that took place in the year 2015 and the expectations for the year 2016. Aishwarya, tell me who bought what in 2015?
Though Mukesh Ambani's Antala, a 27-story residential skyscraper, is India's most expensive house, 2015 saw some big moolah being splurged around for apartments as well as for bungalows. Last week, V.C. Burman, Chairman Emeritus of the Dabur Group, bought a bungalow in the Tawny Posh Golf Links area in Luton's, Delhi. Mr. Burman paid a whopping 160 crores for this bungalow, which has a built-up area of about 9,000 square feet. Subhash Chandra promoted SL Group bought a bungalow built on 2.8 acres of land on Bhagwan Das Road for 304 crore rupees. Co-founder of India Bulls Group, Rajiv Rattan, purchased a bungalow on Amrita Shergill Marg in the prestigious Luton's, Delhi again. He paid 220 crores for this bungalow. Harish Ahuja, the managing director of apparel manufacturing company Shahi Exports, bought a bungalow on Prithviraj Road for a whopping 173 crores. Moving on from Delhi to Mumbai, just meters away from the iconic Antala, the Jindal family that runs pharma firm Jindal Drugs bought a 10,000 square feet apartment in an under construction luxury tower in Lodha Altamount on Altamount Road. This for a whopping 160 crores. Rated amongst the 10 most costliest streets in the world, Altamount Road is home to several celebrities and businessmen. This deal is touted as the biggest apartment deal in India. After breaking this deal down, it comes up to around 1.6 lakh rupees per square feet. In September, industrialist Cyrus Poonawalla paid 750 crores for Lincoln House, a 50,000 square feet heritage mansion located in the heart of the city at Breach Candy. This sprawling mansion once housed the US consulate. It is the costliest deal in the country for a private residence. Same month also saw Kumar Mangalam Birla of the Aditya Birla Group paying 425 crore rupees for the iconic Jatia House in Malabar Hill. This property has a 25,000 square feet built-up area, and the per square foot for this bungalow comes up to be around 1.7 lakh rupees. Now, experts tell us that this trend in residential real estate will continue, as the demand in super luxury category really does not get affected by any slowdown. So going into 2016, we can expect some other prime properties to be picked up by the who's who of the industry.
Now, those are some mind-boggling numbers and deals, and to sort of put that into perspective and help us wrap our heads around it, we are being joined by Anuj Puri, Chairman and Country Head at JLL India. Anuj, thank you so much for being with us here on the news on Magic Bricks. Now, let me ask you this. These deals that took place last year, were they just one-offs, or will we see more such deals happening over the next year as well?
In any market, whether it's a good market or whether it's a bad market, you're going to see the top of the pyramid, which is the absolute luxury segment, will always sell. Whether it is in Delhi, you're going to see that, or whether it is in Bombay, you'll have a lot of the big transactions still continuing to happen even in a down market. In an up market, perhaps there is a little bit more that happens, but even in the down market, that is not as much impacted with the lackluster real estate market. So it is interesting to note that luxury is perhaps the most resilient sector.
All right. Luxury is resilient even in the real estate sector. Now, Anuj, sum up the year 2015 for us. According to you, how was the year 2015 for the real estate industry as a whole?
About 80% of our Indian real estate is on the residential. In that, interesting, the year started very slow, and we saw that the demand was pretty much down, lackluster. We were not seeing the buyers come in. As the year progressed, we started to see the men and the boys starting to differentiate. The developers who were having good reputation, they launched projects which were with full approval, right sizing, right pricing, right location, and that's where we saw a huge demand come in. For example, two projects that were launched in the last quarter of 2015. One was by Oberoi Construction in Borivali and one was by Godrej in Vikhroli. Both of them had a huge amount of demand that came in. So clearly that represented that there are green shoots starting to come in. But these green shoots are not across everybody, or not across all the projects, not across all the developers.
Okay, not across the board. Okay, Anuj. Now tell your expectations from the new year that's upon us, the year 2016. What is your outlook for 2016?
I'm a lot optimistic about 2016. I certainly think it's going to be a better year than 2015. On the office side, it'll continue to have a lot more demand. I think our challenge on the office is going to be really on the supply. Because we haven't had that much of supply. Similarly, on retail, challenge will be on supply. Demand will continue to remain strong. There are a lot of foreign multinationals wanting both offices and the retail space. On the residential side, you will see the demand come back. But again, I would say is that it is not going to be blanket demand coming back for every developer.
Yes.
I also don't think that in 2016, you're going to see all the developers emerge. From the troubles that we had in 2014 or 2015.
All right. Anuj Puri of JLL India, thank you so much for taking time out to be with us here on the news on Magic Bricks Now. And time now for our special series, War of the Cities. It's the race up to the top 20 in the country. 97 of 98 smart city contenders have submitted their smart proposals to the Union Urban Development Ministry. Who will be in and who will be out? Tamil Nadu, for instance, has submitted its smart city proposal to the centre. Remember, Tamil Nadu was struck by torrential rains earlier this month and was unable to submit its plans to the deadline. But my colleague Amita Balachandra gets you this report with all the details of Tamil Nadu's plans to get smart.
That's right, Tamil Nadu government has submitted 12 smart city plans as promised just yesterday to the Ministry of Urban Development. This despite the floods that rocked the state of Tamil Nadu. It had sought for an extension post December 15, 2015. It had sought for an extension and all 12 cities have been submitted, their smart city proposals have been submitted. Just to name all the 12 smart cities in the state of Tamil Nadu, it's Tiruchirappalli, Tirunelveli, Dindigul, Tanjavur, Tirupur, Salem, Vellore, Coimbatore, Madurai, Erode, Thoothukudi and Chennai, all of these cities have been nominated, and the previous list, which was 85 out of 98 cities who had submitted their smart city proposals, now it stands at 97. 97 cities have submitted their smart city proposals. In fact, we also hear that Ministry of Urban Development is setting up 3 teams of 2 experts each, and the plans that are being received by them are being evaluated, and the first batch of 20 smart cities will be out sometime next financial year.
All right, then from Tamil Nadu to Maharashtra, where the government has an ambitious target to build 3 lakh affordable homes in the new year. And to make that possible, it has now decided to stop using just prefab technology as its only method of construction. My colleague Ruchi Deshpande gets us this report with more details on that front.
The Maharashtra government is taking its first steps towards making sure that housing for all by 2022 becomes a reality in the next year. Now, it has gone ahead and considered other technologies in order to make sure that low-cost housing or affordable housing has been set up, and this technologically neutral way can be used when it is giving away contracts for the housing bids. Now, remember that previously Maharashtra government has been using prefabricated construction technology, and this has been going on since 1984, which means builders who have this technology will only be granted contracts regarding low-cost housing. Now, we learned from ministry sources that there was a standing committee elected way back in August this year that comprised of the CEO of MADA, the Principal Secretary of the Housing Ministry, in addition to the engineers from IIT Bombay as well as VJIT. Now, this committee has already compiled all the research for different technologies in order to make sure that low-cost housing becomes a reality with the help of developers. They have assembled together these methods and are going to release it early next year, that is January 2016. That's right, this is in 2016 is when this committee formed by the Maharashtra government will start awarding these bids to other builders instead of using the prefabricated construction technology.
Now moving on, 2015 is quickly drawing to a close and the new year is around the corner. Would you like to be more organized in 2016? Do you always find your important papers or documents misplaced exactly when you need it? If you said yes, then here's a cool DIY project that you can create at home. Design it yourselves. Akash Berry tells you how you can make a paper organizer using a writing pad. Take a look.
You know those times जब हम कोई important document ढूंढ रहे होते हैं और envelopes ढूंढ रहे होते हैं and we can't find them? Well, there is a solution to that problem also. Firstly, get a few clipboards, cut off pieces from this decorative paper to cover the clipboard, and then using glue, paste this piece of decorative paper on the clipboard. First, I'll cover the back side, or you can just cover the front side also. Once you have done that, your clipboard is gonna look like this. See? Now, what you can do is, you can take your important letters, put it in the clipboard. Here we go. And on top of the study table, using nails and hammer, simply hang it. So now, whenever you're looking for your important official documents, envelopes, bills, you'll never have to run around looking for them. You'll exactly know where all the paperwork is. Your bills, your envelopes, your letters, your in fact, my script. So everything you need in paper is going to be here.
And to catch more of that episode, make sure you tune into Design It Yourself only on Magic Bricks Now. And with that, we're out of time here on this show. But remember, if you have any feedback or suggestions for us, write to us on the email ID flashing on your screens. We're also on Twitter and Facebook, so feel free to tweet to us or post a query on our Facebook page. We would absolutely love to hear from you. Also, remember to check out our live streaming website, www.mbnow.in. And with that, it's a wrap on this edition of the news here on Magic Bricks Now. Thank you so much for watching. This is Krishna Kumar signing off.